Hey, this is Danielle. Welcome to the free video. So today I'm going to be talking about the crazy bounce that we got off of symmetry in the indexes and the buy programs that started to come through today. So it was looking pretty nasty, and it has been looking pretty nasty for at least the last week. And I mean, I've been looking at all kinds of support levels. All of them have broken on the way down until finally today there was a level that actually ended up holding. And ironically, this level, the 13,600 price point, this actually happens to be symmetry from the COVID crash. So in Fibonacci, what you do is you just basically go back in time and you look at prior swings, and you look at, for example, here's the high, here's the low. You measure that, and then you project it from this most recent high to say, okay, well, this is what happened before. So if the same thing that happened before happens from here, where would that bring you? Now, the different swings that I measured included the move in 2000, the move in 2007, the move that we saw at the end of 2018, the move that we saw in 2020, and actually the level that hit and held was the one from the 2020 COVID crash. Now, I did erase the other levels that the market fell through on this chart just so you could actually see it, but I did post the chart in the options room as far as the levels that were actually broken. So the levels that were broken included a couple different pullback zones. Like we broke the October pullback levels, we broke the March pullback levels. We did actually break the correction from 2018. So I mean, it was definitely a very substantial move lower. There's only a handful of moves that have looked like this over the course of the last 20 years. So definitely a substantial move in a very quick time frame. When you're looking at what to do here, I mean, the main thing that I have been focusing on is trying to identify an area where the market would finally hold, and then looking for a bounce. So until about noon today, things were looking very, very dicey. And then what ended up happening was when we got down here, down to about 4,200 in the S&P, that was where we started to bounce off the lows, and we started seeing buy programs come through. So it's probably a combination of people getting stopped out because they shorted the lows, in addition to buyers finally starting to come in, that ended up pushing this higher. Now, the number one question that I always get on days like today are, number one, well, how do you see that? Which is, the first thing is going to be the ticks. I mean, this is how you can come in and you can identify, okay, are people buying or selling? For the majority of the day, it was selling, selling, selling. When you're looking at the ticks, you're normally going to see, when you see readings below zero the majority of the day, especially down to -600, especially down to -1,000, -1,500, that is extreme selling. And then what ended up happening was we started to see some buying pick up. So we saw some buy programs come in. And then what usually happens on moves like this is you have the relative strength leaders, or what were the relative strength leaders, start to really come back, and buyers usually come into those first. So the way that I identify stocks to pick up when the market has fallen and it's starting to bounce is going to be with the Phoenix Finder. So this is the Phoenix Finder. What the Phoenix Finder does is it compares trend across multiple different tickers at the same time. You can throw any tickers in here, but I make custom grids based off of tickers I like to trade and look at that are in the same space, because it makes the most sense to compare tickers against each other that are in the same space. So the home builders is one that has been very, very strong. Yes, they did start rolling over when mortgage rates started rising, and there's talk of the Fed slowing down QE. And so they started to roll over. But as you'll see today, home builders actually ended up the day up plus 3%. Now, you might say like, well, how would you know that it's time to come in and start buying some of these when, you know, it's looked like this? Well, what you do is you just use the Phoenix Finder. You use the Phoenix Finder to identify relative strength and weakness, and you say, okay, this was an area that was green, 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 green. Relative strength, you can see the last time it dipped, it rallied like the Phoenix, okay, rose like the Phoenix. So it goes to say that, okay, if it did it last time when it was all the way down here, it could probably do it again, right? So what you look for is when the tickers go red, you want to look for, you know, what is turning green. So you can go down to a lower time frame chart, and this actually shows you like right when you could get in on the shift back higher. So you've got red, 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 and it'll show you which one turns first too. So you have yellow right here, then you have green. So you really want to start thinking about getting in when it's shifting yellow, but green is going to be the confirmation, and then the triangle is going to be the, you know, double confirmation basically. So when you're looking for tickers to get back in on the upside, I mean, you have Home Depot that before anything else started shifting higher today. Home Depot and also Whirlpool. So if you go and look at those individual charts, you can see that Home Depot actually ended up the day up 4.21%. And if you look at the lower time frame, I mean, it basically took off, you know, first thing in the morning. It did pull back after the initial takeoff, but it really was on fire. Look at some of these others, like Lennar was standing out. Lennar ended up being up about 5%. This one took off first thing in the morning. Then you have Lowe's. This one wasn't as early as Home Depot, but still it was lighting up on the Phoenix Finder, showing you that this was one that was taking off. And then also you have a Whirlpool. So the moral of the story is, you know, when the market tanks like this, the main thing that I always like to do is I like to find areas of support, watch for areas of support on the way down, try to find, you know, a spot where it's finally going to hold. And then once price starts shifting higher, I don't just buy it when it's rolling over and tanking, but once it starts shifting higher, you can jump on, you know, the quickest and the strongest tickers to ride it back up to the upside. Now, I don't know if it's going to go to new all-time highs, but at the minimum, you know, you can trade these tickers as long as the momentum holds and until it hits resistance. So in this kind of market environment, I mean, everything is going to be really volatile. There's going to be huge moves, especially like as shown what happened today. But anyways, when you're looking at, you know, what can you do in this type of market environment, a lot of these moves are going to be intraday moves. I have no idea what's going to happen overnight. I mean, tomorrow, like this thing, like the whole market could gap down and it could be a disaster. I don't know. Who knows what's going to happen overnight in this kind of volatility. So, but the point is that you can catch these day moves on an intraday basis, and you can, you know, trade them up and down. And then same thing, like, how would you know if the swing idea was dead? Well, it would shift back over to red. So anyways, if we do get continuation, I do think that these are good tickers to jump on and continue to ride higher. But I will tell you that with the Fed starting tomorrow, Microsoft earnings, Apple, Tesla earnings, it's probably going to be a really volatile week. So sticking with some intraday stuff makes sense. Having a method of doing that makes sense. And other than that, I hope you have a fantastic rest of your day, and I will see you next time.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.